Kenya's status as East Africa's economic powerhouse is at stake as Tanzania races closely behind with a higher growth rate that is increasingly narrowing the gap between the two economies. Tanzania has added impetus to its economic firepower, growing by an impressive 7.5% over the past 5 years, compared to Kenya's growth of just above 5%. The latest International Monetary Fund, or the IMF data, shows that Tanzania's economy expanded 7 times in the past 20 years, while Kenya's output grew 5 times since 1997, with the trend expected in coming years, weakening Nairobi's future dominance. So how is Tanzania doing it? In Tanzania, it is sustained rapid growth that has helped the country reduce the gap in the size of its economy compared to Kenya. It is such growth that saw neighboring Ethiopia overtake Kenya's economy for the first time in 2015, a situation that experts say might happen again with Tanzania if nothing changes. Kenya's economy size was more than double that of Tanzania 20 years ago, but the gap has now narrowed to less than half. The IMF data shows that Kenya's annual economic output, also known as GDP, stood at 13.7 billion in 1997, while that of Tanzania was 6.4 billion. This meant Kenya had an economy 114% larger than Tanzania, or more than double back then. But last year, Kenya's economy was only 46% larger than Tanzania, meaning Tanzania has first been bridging the gap over the period. The IMF data shows that Kenya's GDP has grown 5 times in the past 20 years to 98 billion last year and is expected to touch 100 billion this year. Comparatively, Tanzanian economy has in the same period expanded 7 times to a GDP size of 68 billion last year. It is this breakneck growth speed that has sparked a debate on whether Tanzania, with a bigger population, more natural resources and bigger landmass compared to Kenya, could occupy the region's top economic position it once held. So if Tanzania once held this top position, how did they swap position with Kenya? Kenya has been the top dog in East Africa since 1987, ahead of its neighbors Tanzania, Uganda, and Rwanda in that order, attracting dozens of multinationals and global deals. Before 1987, Tanzania and Kenya swapped the pole position, with Tanzania having been the biggest economy from 1982 to 1984, the IMF data shows. A year later, Nairobi raced past Tanzania, but Dar es Salaam went ahead and reclaimed the slot in 1986, only for Kenya to dislodge it permanently from 1987 to date. Experts believe that Tanzania's newly found bullish stance on business and development as it moves deeper into a market economy, away from socialism that is entrenched in the country's historic culture, has helped spark the growth. So, what are some of the indicators that shows that Tanzania is dominating the East African region? On the trading front, Tanzania has recently been cutting Kenyan orders. The two countries have recently been locked in a trade spat that saw the duo exchange import bans on several commodities such as cooking gas, wheat, and milk products. One reason given is that most products like confectionaries, processed milk, soap, salt, and so on that Kenya used to sell to Tanzania can be manufactured in Tanzania at a lower cost.
Kenya is lagging behind the competitors, with its cost of production remaining a challenge. Electricity is a major cost driver for textile mills in Kenya, though this is expected to...
Uganda has in the past years been the driver of Kenya's exports, while Tanzania was once the second largest buyer of goods from Nairobi, before narrowing its orders. Uganda has in the past 10 years been the largest buyer of Kenyan supplies, making it a key economic partner for Nairobi. But the clout is now waning, with Tanzanian exports to Uganda increasing while Kenya-Uganda trade reduces. However, IMF forecast data shows that by the year 2022, Kenya's economy will stand at $113 billion, against Tanzania's 78 billion US dollars, hinting that catching up with Kenya will take a longer time, if at all it will. Professor of Economics at the University of Nairobi, Mr. Iraki, believes that Dar es Salaam is very unlikely to leap past Nairobi in the foreseeable future based on the private sectors of the two countries. Compared to Tanzania, Kenya's private sector is far much more vibrant and has remained the country's key engine of growth, said Dr. Iraki, citing hundreds of Kenyan businesses with operation in Tanzania. Whereas in both countries, growth has partly been fueled by government-funded infrastructure projects, the private sector in Nairobi continue to do the heavy lifting. What holds Kenya, or the East African economic powerhouse, back has always been dips in its economic growth every 5 years when the country holds its general election. On the other hand, Tanzania has over the years enjoyed relatively smooth political transitions, handing it consistency growth. Tanzania has also emerged as a key producer of gold and diamond, and recently struck huge deposits of natural gas and helium, piling on its economic muscle. Tanzania has also been expanding its seaport, enabling it to import some of the goods it previously had to source from Kenya. Tanzania is also gearing up to construct a multi-billion-dollar standard gauge railway line and a crude oil pipeline in partnership with oil-rich Uganda. Tanzania, under President John Magufuli, snatched the pipeline deal from Kenya following earlier agreements between Nairobi and Kampala. Tanzania's capital city of Dar es Salaam last year launched the region's first bus rapid transit, also known as BRT system, which has eased public transport. A World Bank Cities report released in February this year ranked Dar es Salaam's real estate ahead of Nairobi. The report put the economic value of Dar es Salaam's real estate at 12 billion US dollars ahead of Nairobi's 9 billion US dollars.